Hey friends, in this video, I'll go through what I plan to do with my money in 2022. And I know that it can sometimes be helpful to hear what other people are doing and why they're doing it, so here you go. Every year, I sit down a few weeks before the new year to decide what my investing plan is going to be over the next 12 months. Personally, I'm not someone who has any interest in overcomplicating my investments. Now, it might seem like the more money you have, the more you need to put it into random things like watches, cars, fine china, angel investing, NFTs, or Pokemon cards just to diversify, but in my opinion, that's a load of BS. The more of that garbage you own, the more time you're going to have to spend worrying about it all. Keep it simple if that's what fits your personality. I know there's a lot of things that can change within that short amount of time, so I like to leave a little bit of room for those out of the ordinary scenarios like what happened in early 2020, but I'll talk more about that later in the video. I've decided that over the next year, I'll be putting all of my money into the highest quality investment like the ARK flagship ETF. Think about it, with Cathie Wood claiming her fund is going to deliver a 40% compound annual rate of return during the next 5 years, how could you not want to go all in on her ETFs? What? Shoot, she must really believe in the stocks that she buys because the ARK ETF has a turnover ratio of, wait for it, 71%. What? That means that she sells 71% of the stocks that she buys within a 1-year time period. I'm literally laughing because it's funny. Sounds to me like someone might have some, commitment issues. Am I right? Okay. I'm poking a little too much fun at this person, so I'll stop now. I bet she's a really great gal, but not great enough for me to trust even a penny of my money in her disruptive, innovative, world-changing, insert every other buzzword ETF. The first thing I'm going to be doing is an investment, but only if it's done properly, and that is remodeling my kitchen. This thing has needed done for so long because it's extremely outdated and extremely ugly. So I figure, hey, the best time to dish this money out is, of course, when I'm jobless. If there's one good place to spend money when remodeling portions of a home, the kitchen is close to the top of the list. According to a few places that I checked out, an 80 to 85% return is what you can expect. But there's something else that I have to keep in mind during this process as well. The current plan is to rent this place out whenever I buy my next house. Because of that, I have to make sure not to over-improve the property to the point where I won't get a decent return on investment. On the other hand, I don't want to under-improve the property to put this house at the bottom of the rental range that I'll be expecting. To figure out this sweet spot, I've done a couple of things. First, I looked at a ton of comparable rental properties in the area to get an idea of what the homes look like and what they're charging. The second thing that I did was reach out to 2 different real estate investors in my area to have them come by to give me their thoughts. I'm fairly new to this whole thing, so I wanted to talk to a few people who have way more experience than me. The third thing that I did was look at comparable homes in the area to see what they're selling for and what the insides look like. Even though I don't intend to sell the home once I move on to my next place, I added this part of the process in because I'm what you would call backup plan kind of guy. I'm one of those people who wants to know where the nearest exit is in a place that I go into, just in case I need to dip out really fast. In all seriousness though, I know that a lot of things can change between now and when I start renting the home. For all I know, I'll meet the woman of my dreams and having a rental property won't make sense at that time. So just in case, I want to make sure that this home is able to be sold at the highest end possible. Right now, I'm planning on spending around $15,000. Now, this will upgrade the kitchen enough to where I can get the higher range of rental prices and also fix a few things that I don't personally have the skills to do on my own. I'm of course going to try to keep that amount as low as possible, but if I go a little above that $15,000, then we should still be good from an investment perspective. Index fund ETFs will continue to be my bread and butter for the year, but I plan to make one slight change. I'm officially going into the year owning 0 individual stocks, and holy smokes does it feel good. Right before the end of the year, I offloaded the last few free shares that I received from Robinhood over the past couple of years. For whatever reason, I'm less likely to pay attention to or even worry about the price of an index fund ETF that I own, which is one of the big reasons that I prefer that asset class over all of the others. The only investments that I hold right now are spread between the S&P 500 and Total Stock Market Index Fund. Can anybody say boomer alert? Even though I'm a big fan of the 3-fund investment portfolio, I haven't actually started holding international stocks or bonds yet. Link to check out that video is above my head and in the description of this video. But this year I've decided to start allocating a portion of my money into an international ETF. Yes, I'm finally going global, baby.
Prestige. Worldwide. Why?
It's taken me a while to get to a point where I want to add them into the mix because I just look back at how US-based companies have absolutely clobbered international over the years. For the longest time, I've convinced myself that I don't need to add international because if I own something like the total US stock market index fund, then I'm kind of already investing internationally because a lot of the bigger stocks do business, of course, globally. While that technically is true, I'm still missing out on the true international stocks that are located outside of the US. I've definitely become a victim of home country bias. It's when an investor looks at investments within their own country as superior to anything outside of it. Could international continue to underperform the US? Absolutely. Will that most likely cause me to miss out on some of the upside? Absolutely. But I'm willing to give up a little bit of that potential juice to diversify my overall portfolio more than what it is right now. Just to be clear, I'm not allocating a large percentage to international at this point in time. Heck, in my top 5 Vanguard ETF video, I mentioned how I would personally avoid the Vanguard Total World ETF because it holds 40% international, which I think is absolutely bananas. For now, I'm going to rebalance my retirement account so that 5% is international, then slowly get up to probably about 10 to 15% at some point in time in the future, beyond 2022. So it's going to take me years to get up to that 10 to 15%. Other than this international allocation, the rest of my money going into the stock market will be towards the boring boomer total stock market and S&P 500 index funds. I also plan to invest some money into a few other various things outside of the stock market and real estate. The first is putting some money into the private financial independence community that we started at the beginning of January. This will mainly go towards giving more value to the members and to help grow the community. Link is in the description to check that out if you are interested. On top of that, I'll be investing more money into different areas of education for myself that I think will pay off in the future. Now, these will be in the form of different hobbies, courses, and books as well. I don't have any plans to purchase any additional cryptocurrency. I'm currently happy and content with what I own right now. Right now, I have a little bit more cash on hand than I normally do. The only reason for this is because I'm in the middle of a mini retirement at the moment. If things get weird out there, then this will benefit me because I'll put some of it to good use. Once I decide to stop being a bum and go back to work, this money will be deployed back into the stock market or real estate. Make sure to hit that thumbs up button before you go. Check out the description for more resources and playlists to help out with all of your financial independence and investing needs. I'll see you in the next one, friends. Wait for it. Done.